So finally, Bank of Canada announced the jumbo rate cut this morning, and this was pretty much expected by everybody and their mother in the financial media. It was pretty much guaranteed. The market was already priced in, and this announcement did not surprise anybody. Okay, so the bond market took a dip a little bit, below 2.9, and then it came back up, to 3%. We saw Canadian dollar, moved downward slightly against USD after the news. So there was no surprise. Okay, everybody was expecting that. So of course, it's a good news for anybody who is on debt. Okay, if you have HELOC, if you have variable rate mortgage, good news for you because now your debt servicing cost will go a little bit lower. And the market is also expecting another 25 basis point, maybe 50 basis point by end of this year on December 11th. So there will be the next meeting on December 11th when they may announce another rate cut. I think the market is predicting another 25 at minimum, maybe 50 basis point again. So good news for the people who have a lot of debt. Their debt servicing cost will go lower because they have been super stretched in the last 2 years when they were putting a lot of household income into servicing the debt. That situation may get a little bit better. Okay. Now, the worrisome thing is the economy. Bank itself said they were forecasting 2.1% next year GDP growth, which is of course not possible because if you talk to RBC is saying their projected GDP for the next year is going to be 1.3%. So there is a big delta between what bank is forecasting versus, the RBC is forecasting. And RBC is also forecasting the unemployment rate to go up to 7% next year. So there are some heavy dark clouds hovering over Canada with regards to the economic situation, which is why Bank of Canada has made this announcement. Historically, we have seen the central banks only made these kind of jumbo rate cuts if the situation is getting worse. And right now, they also admitted that they're not worrying about controlling the inflation. They are worrying about keeping the inflation at this level, making sure the economy doesn't contract anymore. And keep in mind that any of the rate cuts or rate hikes has a lag cycle. Okay, it takes up to 18 to 24 months before it actually reflects in the real economy. It immediately reflects into the asset markets, stocks, bonds, real estate, but it doesn't reflect immediately into the real economy. So in the real economy, it may take up to 18 to 24 months before you really see the impact of that rate. So what does it mean for you? If you have variable rate mortgages, HELOC, credit cards, you may see a slight reduction in your interest payments, but you won't see any change in the fixed rate mortgages because fixed rate mortgages are tied to the bond yield, Canada 5-year bond yield. That is still hovering above 3%. It came down a little bit to 2.6% earlier last month, but then it came back up again this month. 3% right now. It's not moving much. So your fixed rate mortgages will still be somewhere between 4.5 and 5 as of now. Maybe it can change in the future, who knows? But as of now, no change in the fixed rate mortgages. Yes, your variable rate mortgages will become a little bit affordable. But the worrisome sign is the economy. It is contracting at a much larger rate compared to what Bank of Canada anticipated. Okay. And now we have this population pullback because of the immigration control. This is also another factor that will be played into the economic projections going forward. Whether you like it or not, Canada's birth rate is 1.26 per woman. You need working age population to contribute to the economy to project in the long run. Right now, this gap has been fulfilled using the immigrants. If you control immigration, this will also be reflected into your economic projections. Now, all of these projections, they work if all else being equal. If something goes wrong unexpectedly, like geopolitical risk or any natural disaster or anything like this, then things can go south. So plan accordingly, maintain your finances, your investments. Put your comments in the section below. Check out the links in the description for you. I also send out a weekly newsletter. If you're interested in reading some of these topics, make sure you subscribe to the newsletter, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and it allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.